imagine a company, right?
Yeah.
It just completely changes its whole identity, the original business.
Yeah.
Almost irrelevant now.
Yeah.
And its market value skyrockets. We're talking over 100,000% in just 1 year. Not from selling widgets, but from a huge bet on a single, pretty volatile digital asset.
Exactly.
So today we're asking, can a public company really ditch its past, redefine itself as basically a crypto proxy, and create massive value, but also, massive risk?
That's the core question.
We're diving into SharpLink Gaming, Inc. That's NASDAQ, SBET.
It's a really fascinating case study in, well, modern financial engineering.
It really is. We're looking at a company that's become effectively a publicly traded way to hold Ethereum. Now, you hear that and maybe you think investment gamble.
All right, sounds risky.
And for many, it absolutely is. But what if it's maybe more than just a speculative play? What if it's a sophisticated financial maneuver?
So our mission in this deep dive is really to scrutinize SBT's radical shift, look at the new leadership, dissect this pretty complex financial engineering they're doing,
Yeah.
and try to figure out what's its intrinsic value now in this new landscape. We'll definitely explore the bull case, which is strong, and the bear case, which is, well, equally strong.
Right. Okay, this is a story that just begs to be explored, doesn't it? Let's peel back the layers for you. We'll do this in 2 parts.
Okay.
First, part 1, we'll look at SharpLink's business, what it was and what it is, its management, and the financials.
Makes sense.
Then in part 2, we'll get into market sentiment, who owns the stock, do a proper risk assessment, and then wrap it up with our overall conclusion. Part 1. Okay, let's start with understanding SharpLink's business, its past, and its really dramatic present.
Business analysis.
So to understand where SharpLink is going, we probably need to just briefly touch on where it came from.
Good idea.
It was originally, a small provider of things like performance marketing, digital engagement stuff, mostly for sports betting and iGaming.
All right, the affiliate marketing side.
Yeah, they had this affiliate marketing services segment, tools like an AI platform called C4, Predictive Sports Analytics. But honestly, that's not really why we're talking about them today.
Not at all. And here's a key insight, right? This legacy business is now, well, it's basically a side note, a footnote almost.
Really? How small are we talking?
Their Q2 2025 revenue, just $0.7 million.
Wow.
And the trailing 12-month revenue, the TTM, only $3.14 million. Now, compare that.
Yeah.
Just think about this. Compare that to its Ethereum treasury, which is around $3.7 billion.
Billion with a B.
Billion with a B. And its market cap is $3.24 billion. So the legacy business revenue, it's like less than 1/100th of 1% of their crypto holdings.
That's just a staggering disconnect.
It is. It's now truly just a shell, a vehicle for this new, highly speculative venture, that massive 100,000% market cap jump in 12 months.
Yeah.
That's all about the Ethereum treasury strategy. It has basically nothing to do with those traditional operations anymore.
Okay, that completely changes how you even think about the company.
Yeah.
But navigating these two totally different worlds, the old gaming tech and this new crypto space, that must create some unique challenges, right?
Oh, absolutely. In its former life, SharpLink was in the global sports betting market. And yeah, that market is growing nicely, like 10.9% compound annual growth projected in the US for the next few years.
Okay.
But it faced really tough competition. Big software players like Klaviyo, Monday.com. And here's something stark. The price-to-sales ratio.
A PS ratio. How much investors pay per dollar of sales?
Exactly. SharpLink's was, get this, 919.10.
900.
919. Compare that to Klaviyo at 10.09. That huge premium on SharpLink's tiny legacy sales.
Right.
It's the market screaming that the old business was basically irrelevant to the new valuation.
Okay, that makes sense. And now as a crypto treasury company, who are they competing against?
Totally different crowd. Think MicroStrategy, MSTR, the big Bitcoin holder, Bitmine, Immersion, Metaplanet. It's a fundamental shift.
Yeah.
From low-margin software to a volatile but potentially high-margin financial services play. And then there's regulation.
Right, always a factor.
Huge factor. Both industries are heavily regulated. Gaming has state laws, global pushes to curb real money stuff, like India's thinking about an online gaming bill. And crypto. Intense scrutiny. SEC calling tokens securities, new FASB accounting rules forcing companies to mark crypto to market value, which can mean big paper losses even if they don't sell.
So given all that, what is SharpLink's competitive advantage now? It's clearly not the old tech.
No, not at all. It's its unique position. It's a regulated, publicly traded proxy for Ethereum. That's the core of it.
So for big investors, institutions.
Exactly. Or anyone restricted from directly using crypto exchanges. It gives them ETH exposure, but through a normal stock structure. And the critical point, the real amplifier here, was an appointment they made.
Ah, yes. This is key.
Joseph Lubin, a co-founder of Ethereum, founder of Consensus, he became chairman in May 2025.
That's a huge name in the crypto world.
Massive. His background, engineering, computer science, Wall Street finance. He was even a VP at Goldman Sachs. It gives them unparalleled credibility, deep ties to the Ethereum network. It's like a modern moat, you know?
Yeah.
An informational, reputational barrier.
That appointment definitely sends a signal. It suggests insight into Ethereum's development, maybe institutional adoption trends, things others wouldn't have. So the stock's value is now almost purely tied to ETH price.
Pretty much. ETH price movements and, crucially, management's ability to actually grow the ETH holdings per share.
Right.
And you see signs people believe it, insider buying, which we'll get to, and big institutions like Citadel Securities, Perify Capital coming in. That signals belief in this new direction.
Okay. With that shift in the business model so clear, let's turn to the leadership team that's actually steering this ship.
Management evaluation.
Well, as you'd expect, the leadership has been completely restructured. It had to be, right? To align with this new crypto focus. We just talked about Joseph Lubin as chairman. Huge crypto expertise there.
And it wasn't just Lubin, right? They brought in someone from traditional finance, too.
They did. Joseph Shalom, formerly at BlackRock, he's co-chief executive officer.
BlackRock. Okay, so Lubin for crypto cred, Shalom for TradFi experience.
Exactly. This team signals a serious professional approach. It kind of separates SharpLink from, maybe some less sophisticated small cap companies that just suddenly jump into a hot sector.
And the market reacted well to these appointments.
Seems like it. The stock price increases after they came on board suggest the market gained confidence in this new strategy.
Now let's talk about how they're managing the money, the capital allocation. That seems absolutely critical here.
It's probably the most critical and also the most complex part of their operations now. The focus is entirely on buying and staking Ethereum, giving investors that direct exposure.
And they're doing this with that dual approach, the big ATM and the buyback. Seems kind of contradictory at first glance.
It does seem contradictory, yeah. A massive $6 billion at the market, or ATM, sales agreement.
Meaning they can sell new shares into the market whenever they want, basically.
Right, up to $6 billion worth. And a $1.5 billion stock buyback program. But it's not really a contradiction. It's sophisticated financial engineering. They call it a capital markets flywheel.
Okay, flywheel. Explain that. How does it work?
Okay, think of it like this. When ETH price is running hot and investor enthusiasm is high, they use the ATM. They issue new shares, raising cash.
To buy more Ethereum.
Exactly. Monetize the enthusiasm. Then, if or when the stock price dips, maybe it trades below the actual value of the ETH they hold per share.
Which can happen with volatile stocks like this.
Right. Then they switch gears. They use the buyback program. They buy back their own shares. This reduces the number of shares outstanding.
So each remaining share represents more Ethereum.
Precisely. It makes the buybacks accretive on an ETH per share basis. It increases the ETH backing for existing shareholders. It's this continuous cycle, potentially self-funding.
So management's main goal is just to increase that ETH per share number. They call it ETH concentration.
That's their key metric. ETH held per 1,000 diluted shares. And they say it's risen over 100% just since June 2025.
Wow. But it's opportunistic, right? Timing must be everything. Get it wrong.
And it could be disastrous. Huge execution risk.
Yeah.
You issue shares too low or buy back too high, you destroy value. So forget traditional metrics like ROIC, return on invested capital.
Irrelevant.
Totally irrelevant. ETH concentration is the game here. And just a note for traditional folks, no dividend. All capital goes into the strategy.
All right, this strategy is fascinating. Let's dig into the actual numbers now and see how this looks on paper.
Financial analysis.
Okay, the numbers. Let's start with the market cap. As of August 25th, 2025, it was $3.24 billion. And the growth, which is explosive, up almost 195% in 30 days. And over the last 12 months, that's staggering 102,716%.
It's almost hard to comprehend. But again, contrast that with the legacy business TTM revenue, just $3.14 million. Right. And that revenue trend has been declining for 5 years.
So that just hammers home the point. The old business is a non-factor in this valuation.
Completely. And profit margins, consistently negative. Q2 2025 saw a net loss of $103.4 million.
Ouch. What drove that loss?
Mostly non-cash stuff. impairment charges on their ETH holdings because of those new accounting rules, plus stock-based compensation, and free cash flow from operations. Not really applicable. They're generating cash from the capital markets from that flywheel, not the old business.
Okay, so operationally, it's losing money on paper, legacy business is tiny. But what about the balance sheet? Is it stable?
That's actually a surprising strength. No reported debt.
Really? Zero debt?
Seems so, which is significant, right? For such a volatile, capital-intensive strategy, having no debt provides a cushion.
Definitely. And liquidity.
Looks strong, too. Current ratio of 3.27. That indicates they have plenty of short-term assets to cover short-term liabilities. But again, no history of paying a dividend. It's all about ETH accumulation.
So this brings us back to the valuation question. How on earth do you value this?
Yeah, it's the crux of it. Traditional methods? Forget it. A discounted cash flow model needs predictable cash flows. Not happening here.
Price to earnings. Can't use that with negative earnings.
Exactly.
Yeah.
And we already talked about the price to sales ratio being over 900, completely disconnected from operations.
So it really has to be about the assets they hold.
It's the only logical approach, an asset-based model, specifically net asset value, or NAV. It's the most transparent way when a company's worth is basically tied to what it owns, not what it does.
Okay, like valuing a closed-end fund or something similar?
Kind of, yeah. It's like valuing an investment vehicle more than a traditional operating company.
So let's break down that NAV calculation.
Okay. As of August 24th, 2025, they reported holding 797,704 ETH. At the time, that was worth approximately $3.7 billion.
Okay.
Plus, they had around $200 million in cash, earmarked for more acquisitions, not for more ETH.
Then liabilities, the legacy business value.
Pretty much nominal in the grand scheme. Minimal liabilities reported, and no debt. So you take the assets, the ETH, plus cash, subtract minimal liabilities.
Divided by the number of shares.
Right. Around 169 million diluted shares outstanding. That gives you an ETH value per share of roughly $21.89 and approximate NAV per share, including the cash, of about $23.08.
Okay, NAV around $23.08, and the stock price as of August 27th was $19.17.
Correct, which suggests it was trading at a significant discount to that underlying asset value, around negative 16.9%.
But big caveat here that NAV is moving constantly, right?
Absolutely crucial point. That NAV calculation is a snapshot, it's highly simplified, and it's extremely sensitive to the market price of Ethereum. ETH goes up, NAV goes up, ETH goes down, and NAV goes down instantly.
Yeah.
Part 2.
All right, we've looked at the business, the management, the financials, the valuation approach. Now let's shift to part 2 and talk about how the market is actually perceiving this radical pivot by SharpLink.
Market sentiment.
So market perception, it sounds like it's all over the place.
Deeply split is a good way to put it. You don't see many traditional Wall Street analysts putting price targets on this.
No bulge bracket reports.
Not really. It's more evaluated by, crypto-focused publications, some AI-driven models, and they paint a very mixed picture.
Like what?
Well, one AI analysis we saw gives the stock a strong sell, a really low AI score, 1 out of 10. So extreme caution there.
Okay, that's bearish.
Very. But then you have other analysts, likely more crypto-focused, predicting maybe a $40 price target if Ethereum climbs significantly, say to the $6,000, $7,000 range.
Which would be a big jump, but not unheard of in crypto bull runs.
Exactly. So you have that bullish scenario too. And we know this stock is incredibly sensitive to news. Remember May 2025 when they announced the Ethereum play?
Yeah.
It surged over 1,000% in a single week. Just illustrates the volatility and news sensitivity.
Wild. What about things like short interest or people betting against it?
Direct short interest data wasn't readily available in our sources, but it was mentioned that the stock is available to sell short.
So the mechanism is there. Suggests that at least some bearish speculation is likely.
Probably. And technical analysis.
Yeah.
Based on things like moving averages. That also generally suggested a sell signal around the time of our data snapshot.
And the beta, you mentioned that earlier, 15.61.
Yeah, 15.61. That confirms it's just extraordinarily volatile. High risk, high reward.
Remind us what beta means again.
Sure. A beta of 1 means the stock tends to move with the overall market. Over 1 means more volatile in the market. Under 1 means less.
So 15.61 is...
It means it's expected to be over 15 times more volatile than the broader market, both on the way up and the way down. It's truly a roller coaster.
Okay.
This isn't a traditional investment. Price moves on hype, on those capital raising announcements, and fundamentally on the crypto market waves.
Yeah.
And the drops can be brutal. Past declines have been as sharp as 90% from its peak.
90%. Wow. Okay, so given that extreme volatility, understanding who actually owns the stock feels even more important.
Ownership structure.
Absolutely. Stepping back and looking at ownership gives really crucial context here. Recent SEC filings around June 30, 2025, showed an influx of new institutional players.
Oh, interesting. Like who?
Names like Citadel Securities, Parify Capital, they took large positions.
Citadel, Parify. Those are serious, sophisticated players.
Exactly. This isn't just, retail mania driving the price. Sophisticated institutions are involved, which lends a certain credibility to the whole venture, despite the speculative nature.
What about the overall concentration? Is it mostly institutions?
It's a mix. Institutions typically hold maybe 30–60% of stocks like this, but here's another strong signal. Insider buying.
Management putting their own money in.
Yes. Filings showed insiders bought 52,080 shares over the prior 3 months. That's management aligning their own capital with this new direction. Always a positive sign. Insider ownership itself is usually in the 5–20% range for companies like this.
So you've got institutional validation and insider buying.
Right. That combination definitely strengthens the bull case. It suggests the smart money, both internal and external, sees potential here, not just pure retail hype.
Okay, that ownership picture is compelling. Now let's try to synthesize everything we've discussed into a formal risk assessment.
Risk assessment.
All right, let's do a SWOT analysis, strengths, weaknesses, opportunities, threats, but framed specifically around SharpLink's big transition. Let's start with strengths.
Okay. Strength number 1, that balance sheet. Capital rich, no reported long-term debt. That's a big plus.
Definitely. What else?
The new management team, Lubin and Shalom. Deep ties to both Ethereum and traditional finance. That's a huge asset.
Credibility and expertise.
Yep. And third, that capital markets flywheel strategy. It seems well-defined, disciplined, and focused on shareholder value accretion, specifically ETH per share.
Okay, those are strong points. Now, the weaknesses. What stands out?
Well, the elephant in the room, legacy business, it's unproven in its current state, declining, unprofitable. It provides basically zero valuation support.
It's just there.
Pretty much. Second big weakness, extreme dependence on a single, very volatile digital asset, Ethereum. Massive idiosyncratic risk. If ETH crashes, SBET likely crashes harder.
Right. And the ATM.
That's the third weakness, or at least the major risk, that huge $6 billion ATM facility. While strategic, it creates a constant, severe risk of shareholder dilution if they issue too many shares at the wrong price.
Okay, makes sense. How about opportunities? What's the upside potential?
Biggest opportunity. Continued institutional adoption of crypto assets. If big money keeps flowing into ETH, that's a massive tailwind for SBET.
Riding the wave.
Exactly. Also, the Ethereum network itself is maturing. Things like staking allow generating yield on their holdings, potentially boosting that ETH concentration over time.
Passive income on their ETH pile.
Sort of, yeah. And maybe a long shot, but the online sports betting and iGaming markets are still growing. That offers a potential, though likely small, ancillary revenue stream if they ever decide to refocus there slightly.
Okay. Finally, threats. What are the biggest dangers?
Threat number 1, by far, crypto market volatility. A major downturn, a real crypto winter, would hammer the value of their core asset.
The whole thesis collapses.
Potentially. Second, the legal and regulatory environment. It's still evolving and unpredictable for both crypto and gaming. A bad ruling could change everything. Third, those new FASB accounting rules. They can create complexity and big, non-cash losses on paper, which might spook investors even if the underlying ETH is fine.
Accounting impacting sentiment.
Yes. And fourth, the flywheel itself relies on optimism. If investor confidence evaporates, they can't effectively use the ATM, the whole mechanism could seize up. And finally, competition. Other companies doing similar things, maybe even crypto ETFs becoming more accessible.
That's a comprehensive look at the risks. Okay, this has been a really deep dive into a very unusual company. Let's try to bring it all together now in our conclusion. Okay, so synthesizing all this. I think the critical takeaway is that SharpLink Gaming isn't your grandpa's value investment. It's not Warren Buffett style at all.
Definitely not buying See's candies here.
Not even close. It's a highly speculative instrument, really designed for a specific type of investor, someone who actively wants direct, professionally managed, and potentially leveraged exposure to Ethereum.
Right, so let's lay out the bull case clearly.
Okay, the bull case. SharpLink is a pure play vehicle for ETH. It's managed by a sophisticated team, Lubin and Shalom, with deep connections. That capital markets flywheel is a disciplined strategy to grow ETH per share, and it offers regulated exposure for investors who maybe can't or don't want to deal with crypto exchanges directly.
Makes sense. Now, the bear case.
The bear case, highly speculative. The legacy business is fundamentally, almost worthless in its current contribution. Valuation is almost entirely dependent on one volatile asset. That complex capital strategy, especially the huge ATM, carries constant, serious dilution risk. And if crypto tanks significantly and stays down, this stock likely falls faster and harder than ETH itself.
A leverage bet both ways.
Essentially, yes.
Yeah, and our valuation summary, the NAV model.
Right. Our simplified NAV model estimated an intrinsic value around $23.08 per share. With the stock trading near $19.17 at the time, it suggested a potential discount. But again, massive caveat that NAV is tied directly to the fluctuating price of ETH.
So the concluding outlook.
Well, for a traditional investor, SBET probably represents an unacceptable level of risk. There's no real foundational business underpinning it anymore. The whole thesis relies not just on ETH going up, but on management executing that tricky flywheel strategy perfectly in a crazy market.
Okay. So what does this all mean for you, the listener?
It means if you're that traditional investor, this probably isn't for you. But for a speculative investor, someone comfortable with extreme risk for potential high reward, it represents an opportunity. You have a management team that seems to really understand the specific game they're playing here.
So the investment isn't really in SharpLink Gaming, the company.
No. The investment is basically in a fund, a publicly traded fund, that holds a single high-growth, high-risk asset managed via this dynamic capital strategy. Outro. This deep dive into SharpLink really highlights how companies are fundamentally rethinking what they even are in this digital age. It leaves us with a provocative thought, doesn't it?
Which is?
As traditional finance and digital finance keep converging, are we going to see more companies follow this path, becoming pure-play proxies for digital assets? Could this fundamentally redefine what we even mean by a business?
That's definitely something to chew on. Will the lines blur completely? Fascinating. Okay, if you found this deep dive valuable, please remember to like and subscribe to Stock Analytics AI.
It really helps us out.
It does. And for just $4.99 a month, members get priority deep dives on tickers just like SharpLink Gaming. Plus, over the next few months, we're actually covering all of the S&P 500 stocks. Members get exclusive priority access to those too.
A huge undertaking.
It is. And if you just want a one-off deep dive on a specific stock, you can always drop us a super thanks.
And just a standard reminder, this analysis was generated by an AI system. It's purely for educational purposes. It should absolutely not be considered financial advice.
Please do your own research or consult with a qualified financial advisor before making any investment decisions. Thanks for tuning in.